Hello, agents. Hello, everyone. Well, guaranteed lifetime income is a big topic. Did you know, ever since I started in this business, we've been able to guarantee income in the future with a single premium deposit today. So let's take a look at some deferred immediate annuities with guaranteed income in the future. Now we're going to look at a couple different scenarios here, but the main thing we want to look at is what the cost is today to fund the future income, or conversely, what will a premium today give you in the future? So first we're going to say, hey, let's say you're 40 years old today and you want an income of $100,000 a year starting at age 65. And you want to guarantee that today. How much do you think that would cost? Well, the payment on that for a 40-year-old male that wants to take income 25 years from now, so that's 2050, would be a purchase payment of $371,513.16, right? Rates are subject to change. This is as of February 28, 2025. And, these quotes literally change daily because every day you wait is one less day of deferral, right? So we are assuming a first start date of 2/28/50 and a deposit date, let's say, of 2/28/25. But if you wait to 3/15/25 to deposit it, you lost 2 weeks of deferral in there. So the payment's going to change a tiny bit. So just these have to be quoted very sensitively towards the timing. You got to keep the deferral period the same. Anyway, back to the quote. $371,000 will guarantee this client that income of $8,333.41 per month for life with no less than the 10-year certain, right? So what does that tell me? That gives a guaranteed payment of $1 million if it starts after the payments. And I'm going to get into this for a second. It's one big, huge, like, what's the catch? This is the catch on these deferred immediate annuities. We'll get into it in a minute. Let's do one other scenario first. So anyway, this one is the, 371 for this 40-year-old male to guarantee $100,000 of income at age 65. Today, set, done, right? No problem. Next is we're going to say, let's say this 40-year-old only has 100 grand. What would it look like? And the previous quote, by the way, was a life in 10. This we're going to quote on a life in 15. So $100,000 will kick off 15/19/67. It's like $18,000 or 18.24%, right? So if we go back a second and you want to look at this one, what was the actual? It was like 26.92% of your original 100,000. This one was a life in 10. That's why you got the $1 million. This one's a life in 15. So you're going to get a little bit more back. You're going to get $273,000 back on that income should you be alive when the income starts. So why do I keep saying that? Oh, by the way, if you're going to use a deferred start and for lifetime income, you want to use the highest quality carriers. This one's A+, AM Best, S&P, Moody's, great, B, Weiss, and a 90 Comdex. Strongly suggest staying with the highest quality on these. Okay, you don't want to go to a new company or something that's lower rated or could possibly run into more trouble, right? So what is the catch? So we're going to talk about what's the catch on these deferred immediate annuities. Well, if the annuitant dies before the income start date, 100% of the purchase payment will be returned. Let's think about that for a second, right? So if you just deferred this thing for 29 years and then you pass away, or let's say 24 years before the 25th year, let's say you just make it simple. You pass away a year before the deferral ends. You only get your money back. You lost all that built up gain and that future value. So it's very important to be alive when these payments start, because even the period certain is not going to help you out there. If the annuitant dies after the income start date, but before the end of the certain payment, income payments will continue to the end of the certain payment period. So when we go back a couple pages really quick, you see these certain guaranteed, this 273. If this person died on 2/23/2045, they would only get 100, not this 273 guaranteed. They get the 100 right back right away. But the idea is we're supposed to have a little bit of gain in these. So there's your risk. There's a big risk, right? Because you might not earn any interest at all on that money. You have to earn money. And there is an exclusion ratio on these too. So part of that money coming back is going to have an exclusion ratio depending on the, deposit, the term, how much interest is paid. The higher the interest, the lower the exclusion. So a couple cool things about this contract, though, is it allows you to change the income start date, right? You may move the income start date up to 5 years earlier or later than suggested. So it gives you some flexibility. Of course, you're going to change the payment if you do that, right? You can add money to it too. Let's say you're not quite at that 100 grand. So you put some money in, you can keep adding till you get to a premium, or you can keep adding to increase the future income you get. You can add to it. And it also allows some advanced payments. So everyone's like liquidity, right? Well, this will give you 6 advanced payments in advance, and then you got to wait a little while to get them again, but you can advance yourself up to 6 subsequent payments. So for a total of 7-month payments in a lump sum, you made it, and you can do in advance 3 times. You can do it up to 3 times. So, why not do it right away? Anyway, I think it's a really great product. If you stay alive, you got to stay alive though. So it's for people who are in really good health, and going out 25, 30 years gets a little more dangerous. So if you want to stay in that 20-year range, maybe a little safer, but yeah, the younger you are, the better as well. So just realize you can just walk away with what you put in. So it is an immediate annuity. And that's one of the things. They're based on longevity, not so much for accumulation. They're really for longevity, income into the future. So here's one more 40-year-old deferring 30 years. As we just said, what happens if you die within that 30 years. But this person would get on $100,000 today, this 40-year-old would get an income of $3,152 a month, which is $37,000 a year, or 37% of that initial 100 grand for life with no less than 10 years. Minimum guarantee return on that, should they be alive at that 30th year when the income starts, is $378,000. So $378 guaranteed on your 100. Worst case scenario is 100 back. So dangerous that way, but should you live, and these things are for longevity, it is really, really amazing. So here's just some basic disclosures. Pause the screen there if you want to read it. Follow me on social media. I do a lot of updates on YouTube, LinkedIn, and X for the most up-to-date information. Thanks for watching, and we'll talk to you later. Hope you're all having a great week. Remember, no fees on anything I discuss. Everything's built in. All commissions and charges and all that. So no fees, just insurance guarantees. Thanks for watching. We'll talk to you later. Take care. Bye-bye.